Okay guys, we're going to go back to Ask Scruff. I've got loads to catch up with after the Scruff in the Sun event. It was a roaring success, and it's really what the squad is all about. It was pulling together, coming in as strangers but leaving as friends. Now, the Ask Scruff is in and around that. It's getting into the nitty gritty. So let's get into this and have a quick look. So there is a lot for me to get through and cipher through. I will get to every one of them. So I'm coming back here to the 4th of November and then I'll skip through this lot and see what we can find. So this one's to Kojak. Little salute to you, kid. When looking at a FIB retracement, how much weight do you put on the bias tool? And I understand the tool is more visual. However, if your bias tool is different to the time frame, would you still take a replacement trade if the triggers are there, even if the bias sheet says no trade? Okay. There's a few things that I need to pick out of that. First of all, that sounds like it's leaning to I'm chasing the market. In other words, there's nothing there, but I'm going to take a trade anyway. That's a big no-no. Big no-no. If there's nothing there, you leave it alone, period. Now, sometimes you can see a trade inside a trade. Now, what that means is, yes, there's a strong retracement or there's a strong drive. That could be a retracement. And your bias tool is completely out of whack. Now, in this situation, yes, I would take the trade as long as a certain criteria is in place. And I'll show you. And what I'm driving at here is you're always looking to put your ducks in a row. If there's nothing there and you're looking round the chart, hunting for a trade, going down the time frames, this job ain't for you. You know, and I see it time and time again. I see it in the comments, and I say, oh, you take a market structure from an hourly chart. Good luck with that one. And all these other different things. There's a good reason I've been in this game a long time. I'm very patient. And not only am I patient, I'm methodical, and I'm looking for certain things. I never chase a market, ever. But 90% of you do, 90% of you fail, and that's why you kick off. And the reason 90% is banded around is there's a thing called the 390s. 90% of traders lose 90% of their money in 90 days. Every single one of them should never be trading in the first place, which is why the statistics are so high of failure in this business. It's because they're not suited to the job. So that's my little scruffy rant. But really what I'm trying to push home is if you're chasing markets and you're looking in low time frames, just hunting trade after trade after trade, wasting your time. But I did also say there's a trade inside a trade. So let's have a little look. But you've got to be aware of what you're doing. Now, you put your buy sheet in. Now, I'll tell you straight away, just looking at that buy sheet would be down. All right? And I know it's down because I do multi-time frame analysis. So I know what the overall view of the market is. But there's also a very, very strong drive that we can see here. And I like to use up-to-date charts. When we're away with the squad and the last part of the event is breaking down a live chart so you can understand what I'm talking about. We followed it the next day and it did exactly what we were talking about. Now, as we go through this, what you can see is the market has pushed down, pushed up, and then has stalled on key levels. They are what we really need. Now, one of the things that you said was, would I still take the trade if the bias was going the other way? And I said there'd be criteria. Well, the criteria is very simple. It's have I got enough space between these levels to get there? Let me demonstrate, and then I'll explain why it will be a bad trade. So if I draw the FIB in, the high to the low, we can see the 23 point there, and it will naturally move to a 38 with a view to get to the 50. Now I've already decided this thing's going down, so the chances of it getting to the 50 is diminished. So the first target point I'm looking for is the 38. But look what's in its path. 1, 2 trades. Or 1, 2 levels rather. Each one of those levels was significant because it didn't half hold the price each time. And it was represented again here. So in this scenario, no, I wouldn't take the retracement because there's not enough space to get from one point to the next. There are roadblocks in the path. What I would do in this scenario is I would use the retracement not to buy into the market, but to sell from it. So I would be selling these levels to go back down into these levels down here. So I'll be selling that one down into there, and sure enough, that's what happened. And I'll be selling the blue one into the red one, and sure enough, that's what happened. Now, these would give me good, half-decent trades in line with the major market. But how would I know the major market was down? Because I look at big picture. Now here, you would see that it went up, 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 got to a very high point up here. But again, it's a case of trade what you see, not what you think. What I can see now is failure, 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 failure to get higher. It's failing to get up here. So its only other choice was to come down. Now its testing point would be this blue line here. This one. Again, it bounced in and around that. It failed to get higher, so it was constantly failing to go higher. And then the reason why I know it would have been on a downward motion is because of this candle here. Absolute gusto, breaking through key levels. Get rid of this. Breaking key levels and stalling dead on a predetermined level that I'd already put in, and then failed to break it, and then there's the collapse down. Now what's it done? Well, if it's going on for full retracement, which it looks like it is, the next point of attraction is going to be these levels down here, and then work its way to full retracement down here, and that looks like what it's doing. Now in the meantime, it could easily push up to there and then come back down, but at the moment, until it breaks that red line, this market will be a downward market for me. But again, I would do it day by day. You know, that's just what it was doing at this moment in time. Look at the day, market neutral, find the bias of the day, see if it aligns with the deeper trend to find out whether it's in a bull or bear market, and then you trade appropriately. But if you were going long at this point, these would have been your stalling blocks, which would have told you stay out and go with the bigger trend. I hope that makes sense to you. Catch you all soon.